Today, I'm diving deep into a hot topic that's generating buzz in both the financial and tech worlds. Would cryptocurrency surge under a President Trump administration? With digital assets already making headlines for their dramatic price swings, many are asking whether Trump's policy style and economic agenda could trigger a major rally in crypto markets. In this analysis, I'll explore the historical backdrop of crypto under previous administrations, examine potential regulatory and economic shifts, and consider what leading experts predict for digital assets in 2025 and beyond. I begin by looking back at the early days of Trump's presidency and how his policies affected the crypto landscape. During his first term, regulatory uncertainty combined with bold economic policies often led to market volatility, not only in traditional finance but also in the digital asset space. Some observers noted brief surges in Bitcoin and other cryptocurrencies following announcements of deregulation or pro-growth measures. While many factors were at play, this historical period offers important lessons about how market sentiment can be influenced by political rhetoric and policy shifts. Fast forward to 2025, cryptocurrency is now a multi-trillion-dollar market with deep institutional participation and widespread public awareness. I see that digital assets have become more mature, with greater liquidity and better risk management. Yet, the market remains sensitive to policy changes, technological breakthroughs, and global economic conditions. Despite this maturity, many investors still view crypto as a hedge against traditional market instability, a perspective that could become even more relevant under new economic policies. One of the most critical variables is regulation. I've noticed that Trump has hinted at deregulation and a more business-friendly approach, which some believe could extend to the crypto space. On one hand, a relaxed regulatory framework might spur innovation and institutional investment by reducing compliance burdens. On the other hand, I also see concerns that his unpredictable approach might lead to sudden crackdowns if he perceives digital currencies as a threat to traditional finance. Experts remain divided. While some predict that clear pro-business regulations could propel crypto values upward, others worry that erratic policy signals could lead to sharp market corrections. Another layer to consider is U.S. monetary policy. Crypto assets have historically reacted to changes in interest rates and inflation expectations. Under Trump's proposed policies, which some argue would involve tax cuts, deregulation, and fiscal stimulus, there's potential for increased liquidity in the markets. In theory, lower interest rates and a more expansive monetary policy could drive investors toward alternative assets like cryptocurrencies. However, I also see that if such policies result in runaway inflation, the Federal Reserve might tighten monetary policy, creating headwinds for riskier investments like crypto. Global political developments heavily influence the price of oil, stock markets, and yes, even cryptocurrencies. I've observed that under Trump, his America First stance sometimes led to heightened geopolitical tensions, particularly with traditional allies and trade partners. If a second Trump term follows a similar pattern, uncertainty in global markets might drive more investors into crypto as a perceived safe haven or alternative store of value. Conversely, if diplomatic breakthroughs or a shift toward more stable international relations occur, crypto markets could see a cooling effect as risk premiums adjust. In recent years, institutions have played an increasingly significant role in the crypto market. Banks, hedge funds, and even pension funds have begun to allocate portions of their portfolios to digital assets. I believe that a pro-business Trump administration could accelerate this trend by implementing policies that foster innovation and reduce regulatory friction. However, I also recognize that institutions require a stable, predictable environment. If Trump's policies introduce too much uncertainty, some institutional investors might hesitate, limiting the potential for a broad-based crypto surge. From my perspective, consumer behavior in the digital age is rapidly evolving. Younger generations are already more comfortable using digital wallets, decentralized finance platforms, and cryptocurrency for everyday transactions. If the Trump administration creates policies that favor deregulation and technological advancement, this could further drive retail adoption of crypto. I see a scenario where everyday consumers not only invest in digital assets as a hedge, but also use them for payments and everyday transactions, blurring the line between conventional money and crypto. Innovation doesn't stop at deregulation. It's also driven by technological breakthroughs in blockchain. I've been following several startups and major tech companies that are pushing the envelope with decentralized finance, DeFi, smart contracts, and scalable blockchain solutions. In an environment where Trump's policies encourage market competition and reduced oversight, I believe these innovations could flourish. This could lead to improved security, greater transaction efficiency, and new use cases that increase the overall value of the crypto ecosystem. Despite the potential upsides, I'm cautious about the inherent risks. Cryptocurrency markets are notoriously volatile, and even small policy missteps can trigger dramatic swings. Under a Trump administration, if policy shifts are abrupt or contradictory, I worry that market sentiment could flip overnight, sending crypto prices plummeting. Moreover, a backlash from traditional financial institutions or a global regulatory clampdown, should other nations decide to counter Trump's deregulation, could exacerbate this volatility. In such a scenario, short-term surges might be followed by equally severe crashes. I've gathered opinions from various experts in the field, and the views are as diverse as they are passionate. Some analysts at financial research firms predict that a Trump-led push for deregulation could be the catalyst for a major crypto rally. They argue that reduced oversight would lower costs for market participants and drive adoption across the board. Others, however, caution that without a consistent and clear regulatory framework, the risks of a bubble or even a crash increase dramatically. These experts emphasize that the key to sustained growth in crypto lies in striking a balance between innovation and investor protection. Looking back, I find it useful to compare the current debate to past periods of financial innovation. Similar to how the dot-com boom was fueled by both exuberance and uncertainty, the crypto market today is riding a wave of technological promise mixed with regulatory ambiguity. History shows that markets can overreact to policy changes, both positively and negatively. The lessons of the past suggest that a balanced, gradual approach to deregulation might yield more sustainable growth in the crypto space, rather than radical swings in either direction. In conclusion, the question of whether crypto would surge under a President Trump is far from settled. The potential for a significant rally exists if his administration delivers on promises of deregulation, fiscal stimulus, and pro-business policies. However, the risks of volatility, regulatory backlash, and global market uncertainties remain very real. From my perspective, the future of cryptocurrency will depend on the delicate balance between fostering innovation and ensuring stability. I'd love to hear your thoughts. Do you believe a Trump presidency would lead to a crypto boom, or would it create too much uncertainty? Share your opinions in the comments below. If you found this deep dive informative, please like, subscribe, and hit the bell for more economic insights on the trends shaping our world. Stay informed, and I'll see you in the next video.
Life's so